good to see you.
Thanks for having me.
All right, we've been speaking quite a bit over the past hour or so, just about all of the intricacies, both on a macro, micro level, crypto, NFTs, and you know what, I want to speak a lot about NFTs a little bit later in the conversation, but I thought some of what Patrick said just a few moments ago was very interesting, that he thinks that your sports heroes and stars, people who you admire, that they're going to help make NFTs more ubiquitous. We could definitely get into that a little bit later. Let's start, though, by talking about an overall broad look of how you view the crypto market right now. There was actually recently read a op-ed entitled "The Toughest Challenges for Cryptocurrency Actually Lie Ahead, Not in the Rear View." And some of the key points are pretty eye-opening here. Despite hype as digital gold, cryptocurrencies have failed to demonstrate either safe haven or inflation-fighting properties when faced with actual market volatility. Talk a little bit about where you see the market overall now and where you see it going, let's say, over the next 18 months.
It's a big question.
Yeah.
I have to say, as an investor, I think this is an incredibly exciting time in the market. We're clearly in a bear market. I think the crypto market went from 3 trillion to roughly $1 trillion. But you got to zoom out and actually look at this asset class. It didn't even exist 10 years ago. And actually, most of the value has been in the last 5 years. And so if you were here in 2018, I think it was much more terrifying because Bitcoin went down 85%, Ethereum went down 95%. And even the most loyal advocates, I think, were wondering, is this going to happen? And 3 things have happened since. 1, institutional money has come into the market. 2, as a VC, we watch the talent and all the talents entering this market. And 3, we have applications that honestly weren't there before. And I think we can talk about NFTs later, and I've learned a lot the last couple of sessions from the various applications and use cases that have been out there. So for me, it's the old Warren Buffett quote, be greedy when others are fearful and be fearful when others are greedy. There was a lot of greed last year, and there's a lot of fear this year, and I think this is actually an incredibly exciting time. And if you look at really broad innovation in markets, Web 1, which is basically the 70s to 2000, Web 2, which was 2000 to 2020, every one of these waves has been basically a massive increase in value. So roughly $1 trillion for Web 1. It's really tough to put it into numbers, but kind of 20 trillion for Web 2. And we think, our belief at the firm is, at $1 trillion today, over the next 10 years, we do think it's going to become a 100 trillion plus type market. And so for us, it's very, very early. But we feel like in the next in the next bull market, we will see some really breakthrough applications that come in. The one thing I would note is this is the first crypto bear market that coincides with a broad bear market. It's been 10 years of basically a bull market. And so until inflation comes down, until rates come down, until there's less geopolitical risk, we're not going to see the crypto market come back. So I think the things to really watch out for are, when are those key macro indicators going to come back in line, and once they start to show signs of improvement, then I think you'll see a very explosive increase in this market. And then to answer your point on inflation hedge and digital gold, that's true. It hasn't played out that way yet. But you're talking about, again, an asset class has been around for 10 years, where gold has been around for centuries, and the simple microeconomics of it all are it's fixed supply in terms of Bitcoin and growing demand. And so price will only go up, I believe, over time. And if that's true around inflation here in the US, but if you're in Syria or you're in Venezuela, it actually is an amazing inflation hedge relative to what their local currency is.
How severe do you expect the period of volatility to be when it comes to Bitcoin? I mean, you and I were discussing this. About 45 million Americans already own Bitcoin. Barron's article just this week actually warned of this surge in volatility.
So volatility means things go up and down. And if you actually look historically, relative to S&P, the volatility has been cut in half on a relative basis. I think going forward, you're not going to see a ton of volatility. What you're going to see is a market that's just not going to move. So Bitcoin is roughly, 20,000 today. I don't know, Ethereum maybe 1,200, 1,300. it's going to work within a band, I believe, of Bitcoin maybe 15,000 or 13,000 to 22,000 for a long time. So to me, it's not going to be that volatile. It's just not going to appreciate much. And I think it's in these times where, we think that there's going to be great builders building really, really interesting applications on these blockchains. And everyone knows the history of, in recessions is when we got Airbnb and we got Uber. And I believe that in the next 10 years, the next kind of big brands that we'll all know will be Web3 networks.
You oversee overall investment strategy for M13. Bitcoin, just one crypto that, of course, is in the news all the time that people watch and they are invested in. It's really the de facto standard still. But there are other big names, of course. Ethereum, for instance, as well as others, like Dogecoin, of course. So what is it that if somebody is first just now saying, you know what, I want to jump on, I want to jump in, maybe dip a toe in, but what is it that you advise people before they invest in crypto?
First of all, I don't give out financial advice, so that's a first disclaimer. I would keep it simple. If you never, and we were talking about this,
yep.
Highly recommend you open up a Coinbase account and buy a Bitcoin, or actually, if that's a lot of money and it is a lot of money to spend $20,000 on something you may or may not believe in, it's not like a stock. You can buy a fraction of a Bitcoin. Go buy $1,000 and just, put a little money in, and it'll just force you to pay attention. And I think as you pay attention, you start to get more interest, and that will make you feel more informed. And then I would also just focus on blue chip stuff. So Bitcoin and Ethereum, we at the firm have a big thesis on Solana, so, but that is more speculative. I would keep it to that. And Dogecoin is a meme. I mean, I wouldn't touch Dogecoin unless you're just trying to have some fun.
Before we go any further, can everybody hear Latif well? Does he need to bring the mic a little closer? I just want to make sure because I'm having a little trouble hearing you. Okay, let's talk a little bit more about NFTs right now, because NFTs in general fascinate me. Are you frustrated with how long it's taking for perhaps NFTs to catch on amongst the general populace? Do you think that more people are adopting and looking into NFTs than you had anticipated?
I'm not frustrated at all. I mean, if you go back to COVID in March of 20, no one knew what an NFT was. Like, it was like a term that a few investors knew it, but no one else really knew what that was. And then what happened was I think it was around May and June of that year, there was a game called NBA Top Shot that came out. Not a game, a collectible that effectively was like these really cool NBA trading cards that were 3D, and you could buy these things. It was through our friends at a company called Dapper Labs that launched that, and that actually started the whole market. And then from there, you've heard all these great talks before me about, the various collectibles and membership clubs and things like that have come from it. And so we've done some work. We think there's about 5 to 10 million NFT holders in the world. It's actually, it shows real market, but it's actually very small. And so I think there's going to be more applications that come through. I personally, wow, what's that? I think we're going to be okay. So I think there's going to be more applications that come through, but this bunch of speculation has kind of come in and out of the market, and it's about folks like Autograph and others that are actually in this market building that's really interesting. There's no, and this is what I said in 2018, there was this question of if. Now the question isn't if, it's like when and how big and how interesting is it going to be, and all the talent and all the capital's in the market. So I'm not worried. I think you're not going to see major breakthroughs until the market starts to come back a little bit, and that's fine. We're patient. As a VC, we deploy money over a 10-year period of time, so we are watching these trends over a very long period, and all I am confident in is when it does come back, it will be absolutely explosive. So I think 5 to 10 million users gets to 2, 3, 4, 500 million users in that time frame.
At what point do you think we get to 1 billion?
So I think in order to get to true parity with, let's say, how many people in the world have a mobile phone, we got to figure out mobile. It's so ironic that this market is so advanced, but everything is done on a desktop. There's you have a Coinbase account and you can use some of these wallets, but it's very clunky. It's not that secure. And until this market figures out mobile, it will never get to multi-billion-dollar usage, in my opinion. Because in Africa, there's a ton of people that have mobile phones, but they don't have computers. So how do you involve them in this market? I do think, and one of the reasons why there's a challenge is because crypto is all about these distributed communities, and Apple and Google control our phones, and they take 30-40% of everything that happens on these downloads. And so until there's a new way to do mobile, and I think there's probably a version of mobile applications that's not through native downloads that will come about, that will be very, very important to this market. But until we see some of that stuff, I don't think you're going to get to true global ubiquity. I do think ultimately the idea of an NFT, we're not even going to talk about it. It's just going to be part of society. And people at the end of the day don't really care about these monikers. They care about the experiences. And until those are very rich, and that includes having great mobile experiences, the market will stay limited. But again, as an investor, a limited market of 500 users is still incredibly valuable. So it's something we're watching very closely.
Token economy is pretty much in its infancy right now. And again, we are seeing it grow in leaps and bounds. Where do you see the most growth potential in terms of sectors and types of businesses or industries that are going to be using and will be able to thrive from NFTs?
Well, I think the obvious one is the creative industries and the creator economy. So the best example that I think it's understood, but how profound the impact will be is not fully appreciated, is the arts. Like right now, if you're an artist and you create a digital piece or even a physical piece that attaches an NFT to it, well, in the old world, you sold a piece and then that piece sold for $10,000. Your profile becomes very big, and then those collectors sell your piece for $10 million, and guess what? You only have the $10,000 to show for it. Now when an artist creates a piece, they can put in the smart contract in the NFT, in perpetuity, I will get 20% of every resale. And that ability to control the flow of money and reward creators for their contributions to the arts and to society, I think is a very, 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 very important innovation, and will, I think, be something that we'll come to appreciate over the next several years. And that has impacts on not just artists, musicians, across the, I think, creative economy.
And with NFTs, then you don't have the issues with the provenance and authenticity of a specific NFT because it's embedded, correct?
That's right. So there's if it's a digital piece, it's all embedded in that digital piece. If it's a physical asset-backed NFT, it serves as a certification. So anytime you go to sell that physical piece of art, you have to sell that NFT with it alongside all the rights that come along with the NFT. And so that is really, I think, a very important application, in addition to all the membership clubs, the token-gated communities that have come up before this.
Something that very much interested me, actually. Latif mentioned that NFTs are being used in the carbon removal marketplace. Go into that a little bit. Talk about Nori.
Yeah, let me tell you about one of my favorite companies. It's called Nori, which is a carbon company, a crypto company, financial services company. It's really a very, very interesting business. So what Nori is, it's a carbon removal marketplace. And on the supply side, they basically have these farmers that sequester carbon in their soil. And on demand side, they have rock and roll bands, the Rolling Stones use them. They've got SMBs, they have crypto companies that want to offset their footprint. But the key thing is the market to date has very been focused on like future offsets, so by future footprint. The issue is we have over a trillion tons of carbon in the atmosphere today that we need to take out. Forget the future footprint. And this business is focused on removing that carbon. And then that market is also very broken in the sense that there's no accounting around it. So, I pull out a ton of carbon and I get a credit, and then right now, I can resell that credit and it changes hands 3 or 4 times. And so there's triple, quadruple counting for the same ton of carbon, and it's not really having the impact that we want it to have. So what Nori does is it fixes that. It puts all the carbon credits on chain so they can't be used again. And so a farmer verifies that they've got this carbon, they get this thing called an NRT, which is the 10-year contract for carbon, a ton of carbon. The buyer says, I want to buy it, and the buyer then gets an NFT sent to them that says, your carbon is on this farm in Nebraska, and that's like verified, and then that NRT gets retired. So there's always a one-to-one between the NFT and the actual carbon credit, and that's really, really important for, this market to really be authentic and to really have an impact. And then we were talking, they're launching a token soon to govern the market. So I'll tell you an interesting story. I was in Nebraska this June with the CEO and the CFTC commissioner, Caroline Pham, and a bunch of these farmers. And these farmers are incredibly sophisticated. They're dealing with livestock pricing and grain pricing because of what's happening in Ukraine. And they were saying to us, this $20 you're paying me for every ton is so under monetized. You guys are way underpricing it. And so what we're doing is we're launching the Nori token. That will be the only way these farmers will get paid, and they can't wait. They said, you guys are under monetizing it, and we're going to let the market dictate what the price should be. And so we think this market is very supply constrained. Everyone wants to offset their footprint. There isn't a lot of verified carbon to offset against, and so we think that this token hopefully will appreciate in price. The farmers will get more monetization from it, and that will incentivize more farmers to come onto the platform and build regenerative farms that can then offset more carbon, and that's kind of the flywheel that we're looking for. And then ultimately, if we really nail it and the company completes its vision, what we want is that when you go into Google, you can see the price of crude oil, or you can see the price of other commodities. You cannot see the price of carbon. Why is that? There just isn't a transparent public market for carbon pricing, and that is what we expect Nori to be. And so it's a really exciting example of using blockchains to fix this problem of double and triple counting, and also using NFTs as a way of verification that what you said you did actually happened, and giving somebody proof of that.
It would seem that the upside potential here is not only tremendous, but it could be infinite, because if you look at this particular scenario, then you could extrapolate that some other industry, some other sector is going to see what's going on with the farmers and with carbon, and they're going to say, you know what, if they could do it, we could do it. So I would think that it just opens up a door that once that door is open and people realize that the door is open, they're going to be anxious to step through it and find a way to monetize.
Yeah, as VCs, we are one step removed from the actual people that are the most brilliant people, which are the entrepreneurs. And so our job is to stay close to the market, get ideas, talk to smart people, and have a nose to find what are the people working on, what are the people that see Nori and then get inspired to do this in other markets. If you ask me what is that market going to be today, I actually don't know. But I know that it's coming, and our job is to stay close to that kind of the ground floor of innovation. There is one thing, I know this was supposed to be like a fintech stage, but there's one thing that I think is pretty interesting, which is the way that cap tables, which is how a round is done in VC, and the way that investor rights work is very antiquated today. A lawyer sits there and calculates on an Excel sheet how many shares everybody has, and then there's investor rights that say, liquidation preferences and waterfalls. There's actually no way to link the two, and I would hypothesize that there have been billions of dollars that have gone into the wrong hands over the years because of fundamental, just honest human error. And what smart contracts can do is fix a lot of that. We're not there today or tomorrow, but we will be there in the next 5 or 10 years. And imagine if you have 3 private stocks that you own that have a bunch of rights with it. Imagine if you could package that as an NFT and sell that to somebody else, and whoever bought it not only got the stock certificates, but they also got all the rights that came with it, and it was governed through the smart contract that would not allow for there to be any human error or any inaccuracies on what is the source of truth. And so that's something that I think about a lot, and we've made a couple small investments in companies that are trying to figure this out. It's high risk, but if they get it right, it will be very big.
What about blockchain regulation? Are there concerns of how the government could perhaps change the industry, change oversight when it comes to these transactions?
I'm not too concerned. I mean, I think that the government is smart enough to realize that this is like a global race, and China's done its own thing with a very closed system, but they don't want to be losing out on this innovation. And it came up on a different panel about the bit license in New York, and that is actually, I think just terrible. And a lot of innovation that's happening in the U.S. is certainly not happening in New York because of the bit license, and maybe some of that can move over here to New Jersey. But I'm not too concerned. I think it will come down whether some things are securities or they're commodities, and there's a bit of a fight between the SEC and the CFTC as to who's going to govern the market. So there needs to be clarity, but ultimately I think we will get there, and innovation always wins out. If you guys remember, Airbnb and Uber were supposed to be shut down because of the taxi commissions and because people are renting out their Airbnbs, and they're both $50-100 billion companies. So innovation always wins out.
Let's get a little bit more nebulous, and then we'll wrap up. When it comes to the future of Web3, what is it as an investor, somebody who manages money, who decides to approve where to put money, what is it that you are perhaps most excited about over maybe the next decade, about where Web3 will take us and change our lives? I know, put you on the spot.
It's a big one.
I know. I said it's nebulous.
So the thing I'm probably most excited by is the idea that, and stick with me on this one if it's a little bit nebulous, but the fact that networks can be governed by tokens instead of traditional revenue models. So I think Twitter is the most under-monetized network in the world. Elon is thinking 44 billion. That is way for what it should be. And if you think about how much, yes, there are bots and there's some disinformation, but the amount of value that is accruing to the Twitter network, if you think about how fast news breaks in the war zones and in sports, and basically the whole crypto market, which I said earlier is $1 trillion market, lives on Twitter, lives on Telegram. So that tells you it should be worth more. But one of the reasons it's not is that it's a sub-optimized network. There's a lot of clunky ads that interrupt the experience, and there isn't a way to govern the network so that your best users, and by the way, I'm probably the least popular VC on Twitter. I don't use it that often, but the most popular users, or the users that contribute the most to the network, if they actually were rewarded with a token instead of really just kind of the social clout that they get, the network would be worth so much more than it is today. And the promise of Web3 is that investors will take way less of a network. And so today, if you look at when Twitter went public, 10% of Twitter was owned by its seed investors, 70% of Twitter was owned by late-stage investors, and 20% of Twitter was owned by the team. In Web3, actually, the way it will work is a network would be owned about 10% from the early investors, about 20% from the team, 20% from the people that secure the network, and then 50% of the network will be actually owned by the users. And so right now, the users own 0% of the network. And in a token economy, they'll own 50, 60% of the network. And that, to me, will take a network that's worth 44 billion. And I think Twitter, if it was built like that, would be $1 trillion network.
All right, Latif, Peracha, M13. Thank you all.